Welcome back to your Sprott Money and Sprott Money News precious metals projections for the month of December 2022, last month of the year. I'm your host, Craig Hemke. Joining us as usual is Chris Vermeulen of the technicaltraders.com. Chris, always good to see you, my friend. Happy holidays.
Happy holidays to you, Craig. Yeah, always a pleasure.
Dude, I'm ready to take the rest of the year off. I don't know about you.
I am.
Well, we'll try to kind of sum it up here today with this video and begin to look ahead a little bit. But it is the holiday season. So first and foremost, please remember that Sprott Money, SprottMoney.com, is the sponsor of all of this great content. Yeah, at the holiday season, one of the biggest sales of the year at Sprott Money is the holiday sale. And you can find a holiday gift guide right there on the SprottMoney.com homepage, as Chris is showing you right now. Shop now, it says. Yeah, shop now. What could be a better gift? Not only for everyone in your life, but like kids, grandkids, than some sound money. Let them hold an ounce of silver in their hand and get a feel for what that really is like. Not paper money that, blows away in the wind, but actual sound money. Go to SprottMoney.com. They've got all kinds of great gift ideas. And again, you can find them in that holiday gift guide. All right, Chris, as we record this, it's about 3 weeks to Christmas. It's going to be it's always an interesting month, really, with so much going on. We got the big Fed meeting here next week. Got tax loss selling, though I'm not sure how many people have gains that they need to offset after a year like this.
Yep.
But a big driving factor all year long has been Fed policy spiking the U.S. dollar, at least as measured by the dollar index. At TF Metals Report, we've been watching this pretty closely in the last couple of weeks because we expected it to bounce from its 200-day moving average. But my man, it finally broke down. It closed below its 200-day moving average, that key technical indicator, last Thursday. It was the first time since June the 16th of 2021. So with your technical expertise, please take a look at that chart and tell us what you think.
Yeah, well, there's a lot going on this chart. I mean, so many people follow the 200-day moving average. I like to follow it. I like to get an idea of what the big trend is. I mean, it's almost, a year-old data, delaying data. But a lot of people follow it, though. If you're more or less above it, it's generally bullish. If you're below it, you got a bit of a bearish bias. But because it is such a slow indicator, you do need to be aware. I don't look at it as like a close below it is imminent. Maybe a weekly close or a month, more so a monthly close below it would be more significant. But you can see there's times when you can kind of pierce through it and it doesn't really stick. And the big question will be has the dollar, topped, or is it, going to continue to go lower? Obviously, we've seen a very nice run in precious metals and miners as the dollar's been breaking down. And we've talked about this, that if we do go into a year-end holiday with stocks and bonds and all those things, we're probably going to see the dollar pull back because all year it's either been, dollar up, stocks down, or stocks down, dollar up. So the fact that the stock market has been rallying for the last, month and a half, 2 months here, we're seeing the dollar do the opposite. So nothing is kind of out of the norm. To me, this is more so a major support level for the dollar. It could pierce and chop through it for a few days, maybe in a couple of weeks. But overall, if we look at it from a big picture, this is a chart that I really like. Let me just go. This is the monthly chart of the dollar. And long story short, I did a super cycle video that our subscribers watch. And I talked about when we had the last super cycle low in commodities, which was a super cycle top in more or less equities. The scenario we had back over here in 2000, 2001 is the same scenario that I find unfolding over here. And if you notice this monthly chart of the dollar, we had some very strong sell-offs followed by strong rally, another sell-off and rally. So it kind of worked itself into a topping phase. And to me, this is kind of the first major pullback. It's really just kind of pulled back to support. I mean, it really just broke out. This is the first kind of pullback. I think we're going to see the dollar continue to push and pull its way higher. I think we're going to get back to 116, maybe even 121 on the dollar. And these are the monthly charts. So we're looking at another 6, 8, maybe more months for this to unfold if it continues to unfold in a similar way. And what that means to me in terms of stocks and precious metal pricing, it means the dollar is going to rally. we're going to go into a much bigger bear market in equities. We're going to have a big breakdown. We're going to see huge selling going on, and we'll probably see precious metals be under pressure. They'll most likely pull back some more. I think this is a bounce in precious metals, and that's all it is at this point. I think they're actually going to go quite a bit lower than the lows, of a month or two ago, which you and I've talked about in the past. It could be a very tough 6, 8, 12 months for precious metals. But once the dollar tops, once the bear market in equities, the panic selling that pulls metals down is over, we're going to see the dollar fall out of bed. And that is going to be the start, to me, of what is going to be the next major cycle for precious metals. And as you mentioned, just before we got on the show here, gold was like 250, 275 over here, and it rallied to 2000. I mean, it's almost like a 10 bagger, right? So I think we're going to be getting into a similar scenario, but we just have to wait for these. I mean, this is the monthly projection. So these are big monthly charts. They take time to unfold, but I think there's a pretty exciting, there's going to be a bumpy ride, but then an exciting recovery and rally, come later next year.
That's again, that's a monthly chart. So in that upper left, that topping pattern, I have to squint at it to see how many candles fit into that circle, but it's at least 12, right? I mean, there's quite a few in there.
Yeah, for all we know, we maybe come back up for a double top and then roll over.
Yeah.
Maybe it does 3 surges to a high. We'll just have to see. I mean, but for sure, these are the monthly charts. So I think we're at least 6, 8 months away, if not further, for this whole process to kind of take hold. And I think gold and silver and miners could actually bottom and start moving up even while the dollar is still up here. I don't think it has to fully break down. I think once the dollar is kind of done, they'll be the leading indicator. We saw this in 2008. 2009, we saw precious metals bottom first, months before the stock market, and then just never look back. And I think it'll be a very similar scenario again.
Well, it's funny. Once you get into January, I'll be writing my annual forecast, which is full of hits and misses, obviously, like everyone else's. But I've already got it in my head that next year is going to be a lot like 2019, which was a lot like 2010, which were other Fed pivot years. And in the first half of both of those years, 2010 and 2019, the turn had begun to happen from central banks, but it took 6 months. I mean, it took 6 months into June of 2019 before the Fed started cutting rates after the pivot in December of 18. And so what you're saying there, I think, kind of lines up with that, Chris. Another 3 to 6 months of some choppy dollar action, up, down, up, down.
Yep.
And then once we get into that actual turn of central bank policy, we'll see where we go. But that's a wonderful, I think, graphic depiction of what history has shown in the past. You mentioned the metals, and they've bounced, and silver led the way down. Silver has led the way back up over the last quarter or so, maybe 2 or 3 months. What do you see in the silver chart? You mentioned maybe even going below those lows that we saw back on September the 1st, briefly below $18. Though $18 does seem like a pretty good support level. What do you see as you look at the silver chart? Let's go there next.
Yeah, if we take a look at the silver chart, you can see the 200-day moving average is sloping down. So the overall bias is to the downside. And you can see it can pierce through it for quite a bit of time and then continue to go back down. So again, the 200-day moving average is just the overall, to me, it's the tide. The tide is going down. And generally, you just got to be aware that, the bias is going to be to the downside. Breakouts can fail. I mean, every time you get a pop in a breakout, they've been failing. So I do think there's more downside potential. If the stock market goes into a full-on bear market and we break down, I think we eventually see, silver potentially back down to 15. Maybe, for all we know, how silver is, it can have these huge spikes that have a knee-jerk rebound. We could spike all the way back down to the 2020 lows when there's, blood on the streets, the stock market's falling, hand over fist, and we're just seeing panic selling hit the market. So I think there's potential for some big flush out low. I mean, the question is, there's, I think, a different scenario going on, which I have never noticed or picked up on before. You might know better, but I've never seen the spreads on physical and the demand for physical and the lack of it being available. So that might skew and support silver a lot more than maybe it has in the past. So that's going to be kind of the wild card, because it is hard to get physical metals.
I might throw on too. Here's another wild card we haven't had in the past. Those in September, or really, I guess, August through November, there were 4 really significant short squeezes where we were tracking the commitment of traders positioning and the hedge funds getting significantly short COMEX silver. And man, they got their heads ripped off 4 times. This most recent one for about $3.
Yeah.
So, are the hedge funds just computers that will just go right back in short again based off of the dollar moving back up, or will they finally learn?
Yeah.
I don't know.
Yeah, it's gonna be interesting. But I still do feel this is a tradable bounce in the precious metals market. I think there's opportunity here, but it's just a short-term play. I know a lot of people want it to be the bottom. They're loading up for the long-term game, but I don't think this is it. I think what we're seeing right now in silver, is very similar to, one of these is kind of a false hope. It's just a pause before another drop. And I mean, that's not what any of us really want. But the reality is when you look at the big picture cycles, you really do have to follow the big cycles, and then you can time them with these shorter term chart patterns. The big cycles are still pointing to lower pricing down the road. So
all right,
until the dollar tops and we see the kind of everything reverse, I don't think we're going to see these things take off in a huge way yet.
Okay, let's shift then to one of the things you do best for your subscribers is tracking sector after sector, trying to find what you've always termed the best asset now. So here we are in December, whatever this is, December the 5th.
Yeah.
What's at the top of your screen? What's the best asset now?
Well, the MJ has jumped to the top of the list. It's not one that we're trading. We are on a buy signal with the stock market. We've been in it. We've taken some profits off on our index trade. You can see MJ has definitely had a huge move in the last little bit, but it really wasn't at the top of our list when we had our stock market buy signal. What was on our top of our list was GDX. We're long GDX. We've been long it for a little while. We actually took some money off on the day it broke through the 200-day because it hit our first target of 7% gain. So we've sold off some of our GDX position, and I still think we've got a very favorable condition for gold and silver miners to keep pushing higher. I think they could go another 7, maybe even 15% to the upside as we head into the end of the year. So we're kind of now in a more defensive mode. We've moved our stop to break even, and we've got a really nice chart pattern on gold miners. When you look at this chart, we've had a very strong impulse move to the upside. So an impulse move is when you've broken 2 previous highs. So we broke a high here, another high here. If you can bust through 2 resistance levels, it's got some upward momentum. And then generally the first pause or pullback is going to be an opportunity. And now it's rallied up. It's hit this first level, and it's a series of little pauses and little bull flags. And it should, I think, continue to go higher with some hopefully end of year little short squeeze and pop before eventually I do think it's going to head back down with gold, silver in the longer run. But it's a very good trade that we've got on, and I really like it. The chart pattern looks really bullish still, even though the markets are down today overall. The big pictures are still pointing to higher pricing into the end of the year.
And people need to realize this. So you don't think that, Chris is trying to go both ways with this. We're talking what's going on in the short term here versus that bigger picture. That's why I thought it was great that you led with the dollar index, because again, if the dollar index bounces back beginning January and heads back up toward 110 or higher, that's
miners are going to go for a nosedive.
Right. So you can be excited and project 10% higher in the GDX over the next couple of weeks. But then, within the bigger picture that you've got, this thesis. Let's close with one more bigger picture chart though, Chris, because again, this is this kind of macro theme I think is important for long term. I mean, we're all long term really in precious metals investors. We're holding physical metal for any one of a number of reasons. We're coming up on the end of the year, end of the month, end of the quarter, all that stuff. You've got a chart there of gold prices. Can you pull up an annual chart of COMEX gold and get a feel for that over the decades?
So my data only goes back to 1975.
Well, that's when they started trading gold futures. So there you go. You're back at the beginning.
There you go. Before my time. So anyways, if we take a look at this is the yearly chart, obviously, It's got a very high momentum. Sounds crazy. It's a yearly chart, but this is a high momentum chart pattern. And that means what we've got here is we've got a very strong rally to the upside. And now it's pulling back with a tight little bull flag. I mean, really, it's just kind of flagging sideways and down. Technically, within the next year, within this bar, not this bar, but the next bar, we could potentially see one huge green bar followed by many, many more, because we're literally just starting the super cycle that started over here. We're just in that scenario that's unfolding now. So it's really exciting when you look at it. The next bar here could be the start of something big. It might go lower yet, but have some type of a reversal by the end of the year. So there could be a long lower wick down to 16 or 15, who knows, and then end up, closing green and having a big rally. So this chart pattern, when you see it on a minute chart or a daily chart, you come down to this 5 period typically on any chart frame, and it usually has a nice, if it's a high momentum move, it rockets higher. You can see down here, it holds above the 5 period. It's a very strong moving average for, continuing trends. So we're right on that cusp. One more bar could be the launch pad, which is in the next 12 months.
Well, and as we referenced, if that dollar index tops out again sometime in the first half of next year and begins a big long pullback like it did from 2002 to 2008, as you can see, look at all those. How many green candles is that in a row, my friend, on the annual chart? 10, 11?
11.
And
topped out in 10, but yeah, that's 11 years of growth, right? It's and that's what I think we're going into. We're going into some pretty, it's always a unique time in the financial markets in the world, but I feel like we're going into something kind of like this again. Precious metals, this is like the perfect storm. The amount of printing going on, crypto's struggling. There's a lot of bullish stories for precious metals.
And again, if you're trying to trade, that's that's totally different from being, just a long-term stacker. But you can hold these thoughts in your mind to be kind of short-term bullish, intermediate term kind of bearish and nervous, but long-term, very long-term bullish. You're measuring out a potential move. What do you see there? Let's wrap with that.
Yeah, this is just the first move. So once it bottoms in the next, I think in 2023, we're going to see potentially a run to 2,700. And depending where that bottom is, those percentages will change. If it comes back down, if it comes down even lower, it'll be a fairly decent rally. But just based on where gold has gone from down over here, the rally, the pullback, we're looking at like 2,600. We can actually grab the more significant low and get a pull of the last super cycle, and it'll project where the next major upside move is, which, believe it or not, is actually fairly close to where it is in terms of measuring that out. But it's pretty exciting to think both of these chart patterns are pointing to the same price. And I do this all the time on the 30-minute chart patterns, on the daily chart patterns, and I'll draw all the Fibonacci extensions on different time frames, and then I change to a longer term view, and I can see where they're all sitting. And a lot of times when they cluster together, it adds more accuracy, meaning all the chart patterns on, say, 3 different time frames are pointing to the same price levels. So somewhere between 26 and 27 and change is, I think, a very, very good target that is going to get reached in the next, who knows how many years it's going to take to get there, but it's definitely in the cards. And I would say in the next, 1 to 2 years, we could see that. And I think it's going to go way beyond that, but that is definitely the first level where it might have a quick pause before going higher. Yeah.
The question will be, you see those red years in the last 10 or 12, and those are often when the Fed attempts to pull back and tighten and that sort of thing. And the market believes them and thinks, oh yeah, you're really going to run the balance sheet back to $1 trillion. Okay.
Yeah.
One of these times they're not going to believe them anymore.
Yep. Yeah.
So we shall see. Well, anyway, Chris, it's always good to visit with you. Your work can be found at thetechnicaltraders.com. Is that correct?
Yeah, thetechnicaltraders.com, or I'm actually going to be bringing back thegoldenOilGuy.com, which I haven't really been running for a long time because I think there's a lot of opportunity in precious metals and energies coming into play. So either one of those are a couple plays that are going to get really active here, because we're coming into a major time where there's going to be great trading, lots of trades going forward.
In that commodity sector too, like you said.
Yeah, yeah.
And again, everybody go to sprottmoney.com, do some holiday shopping. But at least, if anything, take a look at the platform on which you've been listening to this podcast or watching this video, and give them a like, give them a subscribe. That's the least you could do to kind of help them spread the word and get more information out there on the precious metals. Chris, thank you so much. Again, Merry Christmas and Happy Holidays to everybody out there. Happy New Year as well. I'm glad to put this one to bed. And I guess we'll see you again early in January.
Sounds great. All right. Take care, Craig, and take care, everyone else. Happy holidays.
All of us at Sprott Money and SprottMoney.com. Thank you for watching. Have a great holiday season.